Hello, it's Big Cheds, and this is part of the Trading Encyclopedia daily education series on my YouTube channel at Cheds Trading. You can find me, of course, on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about time frames. How do I know which time frame to use? Should I be in the 4-hour? Should I be in the daily? In classical charting, which is Western technical analysis, there are a few rules of thumb that you want to keep in mind. The first one is the longer the time frame, the stronger the signal. So for example, some type of a breakout on a weekly time frame carries much greater significance than that on the daily or the 4-hour or the 1-hour. So you want to keep in mind that if you're taking, for example, a 1-hour breakout, it has a limited window, and you want to stay within that immediate candle series, right? A 1-hour breakout is not going to affect the weekly time frame, for example. And a weekly time frame, a weekly breakout, carries much more significance for the broader trend. Number two, you want to take a look at where the price is in relation to key levels. So in classical charting, when the price drops to a key level, you can drop to a lower time frame. So for example, on the daily chart, when the price here in Bitcoin was most recently coming back and testing local support right around 100K. In this daily candle, you could drop to a 4-hour or even a 1-hour chart and look for price structure. So while still understanding what the price trend is doing on the daily and the weekly, when the price gets to a key level, then you can drop to a lower time frame. All right, that's when you drop to low time frame, price at a key level. You can also drop to a low time frame after volatility. That's the other rule of thumb. After the market's had a big move, it's had a volatile move, then you can drop to a lower time frame and take a look at price structure. When it's in a sideways, grinding sideways environment, for example, here, this is a situation where you would not be dropping to a lower time frame. In fact, you might want to move out to a larger time frame, okay? Because you want to understand what the larger time frame is doing because it sets the table. So I have a couple tweets that are interesting. You want to think about time frames like a scientist using a microscope. Even when you're trading on the 4-hour chart, you want to know what the daily and the weekly trend are telling you. The weekly trend being the primary, secondary trend being daily, and then a minor trend within that, some type of a corrective move. So you want to make sure that you stay on a larger time frame to understand what the price trend is doing, and then after volatility, or when the price is interacting with a key level, you drop to a lower time frame. This is part of the Trading Encyclopedia daily education series on my YouTube channel at Cheds Trading. You can find me on Bitcoin Live, of course, where I am a founding analyst, and on Twitter at Big Cheds. Folks, thank you so much. I hope you're enjoying these, and I will talk to you soon. Big Cheds out.